Today we're going to take a look at Anne's portfolio of stocks held on the Freetrade platform. This is a free to use platform. You can pay to get some enhanced features, but we're using the Freetrade platform, and this is an update on Anne's portfolio. Today being the 30th of June 2024. The total value of her holding is £1,943.16, and it's up by £203.08 since she began investing on this platform. And this shows the performance of the fund over the maximum period of time the shares were held. Now, running down the list, we've got Vanguard, FTSE, All World, Dividend, and she holds 10 shares in this. This is a ETF that invests in high dividend paying stocks throughout the world. And as you can see, the value is up 5.87%. If we click on the actual stock, that gives you the current price, and this tells you about the investment that we hold, current value, number of shares, the amount that's increased by, the monetary value has increased by, recent activity, some nice dividend payouts. 26th of June, £6.36. March, a nice dividend payout, £2.88. And some free shares were bought on the 10th of January. And this is some more information. The opening price, the closing price. The dividend yield is 2.2%, which is quite nice. Plus you get potential growth in the value of the stock. So go back to the portfolio. Next one is Marks and Spencer's. Done remarkably well on this one. They're up 82.57%. Marks and Spencer's, UK, United Kingdom based retailer. They specialise in food and clothes. If you live in the UK, you'll be fully aware of them. More of quality. They base themselves on quality, and they seem to have got it right. Click on that, and we can see the performance of the shares over a 1 month period, over 3 months, 6 months, 1 year, and the maximum performance is they are on an upward trend. Our investment is 452.67. That equates to 158 shares. The average price paid, and that's a return. Recent activity, January this year, £1.58 dividend, and the shares were bought in March 2022, which is just over a year ago, when after doing some research I had the feeling that they were going to go up in the right direction, and I've been proved right in this situation, looking at the way the shares have performed. We've got some statistics here. The price to earnings ratio, market capitalisation, dividend yield, price to book ratio. That's quite a good ratio that I use. It is generally accepted that if the price to book ratio is below 3, the stocks are looked upon as good value in respect of the valuation. And the beta, that's how often the stocks are traded. 1 is sort of neutral, and 2 is obviously a bit high but not overly traded. So that's Marks and Spencer's. We go back to Sandstorm Gold. This was my exposure in the gold market, and we're down 30%. Click on that, and that's how the investment is performed. Recent activity, we had a dividend in April of 54 pence, dividend in January, a dividend and the statistics, a dividend payout, and about this company provides funding to mining companies in exchange for royalties. That's it. They don't actually own or actually do the physical mining themselves. What they do is they lend money to mining companies, and the payback is a percentage of actually the value of the gold that is actually found. So that's Sandstorm Gold, nice way of getting exposure to gold. Then we've got Chevron, done very well, up 74.9%, and we can see the recent activity, nice dividend payouts for Chevron, so it's well worth having this if you're looking for income, passive income. That's the income you get when you don't do any work. Just buy the shares, sit back and pull the income in. January 152, March, no sorry, that was June 152, March 151, December 143. Statistics, it's not overly traded at 1.09 beta. Price to earning ratio 14.39, price to book ratio under 3, good sign. So it's all looking good for them, and it says this multinational Titan covers every aspect of the energy industry, including oil, natural gas and alternative fuels. So they're getting away from carbon and going into green. eBay, not everyone knows eBay, but I use eBay, where you can buy and sell items, and anyone can sell on the site and anyone can buy on the site, companies and individuals. And we're doing well at 19.58% increase. And what we've got here, recent activity, we had a dividend payout in June of 53 pence, one in March 53 pence, December 49 pence. They're all 3 monthly dividend payouts. Price to earning ratio, anything under 20 is said to be okay. Price to book ratio, a little overvalued, and the dividend yield is 2%. Next one, M&T Bank, £116, up 17%. I've just got to refresh my memory on why I bought these ones. It's obviously a bank. We're up. I think I might have bought this because they pay out nice dividends, which you can see here. March 85 pence, December 84, September. Statistics, beta is below 1, which means nice stable trading on the shares. Price to earnings under 20, price to book well under 3, actually under 1, so it's definitely undervalued. You're buying the company for less than it's actually, unless its book value is. And we'll carry on scrolling about M&T Bank. This company offers banking services to customers across the southern and eastern US. So it's banks seem to do very well. It may be well worth looking to invest more in this, or doing a bit of research update to see where we are with this stock. So it's M&T Bank, nice dividend paying stock. National Grid, they own the pylons and the pipelines that distribute power in the UK. And we're up slightly. We own 10 shares. No, sorry, we're down 4%. Recent activity, a very nice dividend payout in June of £4. One in January, £1. Nice one in August, £3. The beta, very low trading, 0.34. That means the shares don't trade that often or that much. Price to earning ratio under 20. Price to book ratio just over 1. All looking good. And the dividend yield is 6.45. And A bit about the National Grid PLC. Simply, they keep the lights and boiler working. The utility supplier manages the gas and electricity transmission network in the UK. So they seem to be paying nice dividends, so that might be a stock worth holding on to and possibly increasing if I'm looking for some nice passive income. And at the moment they're down. Might be worth looking at getting an update on this one for the future. iShares Physical Gold. This is an ETF that actually invests in gold, and that gives you the nearest or the most nearest you can ever get to owning gold without actually having gold bars stored at home. So it's a very safe way of investing in gold, and we're up 40%. This reflects the price of gold. Current value, number of shares is 1. What we've got here to say, I bought this on the 25th. So I bought this on the 1st of November 21. So we can see how the price of gold has gone up. No dividends, but I'm actually tracking the value of gold. So I'm up at the moment because gold is actually up. Physical gold is up since I bought. It's just worth looking at if you want to get exposure to gold without actually having to buy it. Goldfields ADR. This is a gold mining company, I believe, up 43%. What we've got to say here, yeah, up 43%, and they pay dividends, 34 pence, 27 pence, 37 pence. Statistics, 2.7% dividend. And it says the American depository represents shares in Goldfields. The company is one of the largest gold producers in the world. It operates mines in Africa, Australia and South America. And so you're actually getting direct access to gold mining companies. Walgreen Boots, if you live in the UK, you know what Boots is. Boots to chemists, shops, retail. I don't think they're not doing so well, and you can see by their stock valuation, and I've been in a Boots store, they don't seem to be as busy as they have been, and their stock holdings seem to be a lot less. Looking at the dividend payouts, we've had a 46 pence dividend payout in June, 1 in March, 1 in December. Beta is 0.7, so it's under 1. Not a lot of trading done. The dividend yield is 8.27%. That is a higher dividend yield because the price of the stock has gone down. Price to earning ratio, the price to book ratio is 0.5. So the you're actually buying shares in the company at half of what it's really worth. So it might be a good time to invest more. And it says here, this global retailer operates pharmacies around the world. So yes, America and UK, for example. Go back to the portfolio. Oil and gas explorers. This is a way of getting exposure to the oil and gas market. We're up 57%. And we can have a quick look at recent activity. I bought this stock in October 21, and we've had no dividend payouts. So that's where we are with that one. So we're not losing out, but nothing exciting has happened. The S&P 500, iShares ETF. This gives you direct exposure to the Standard & Poor's 500 group of stocks held in America. I'm up 15%, and I have 2 stocks in this holding. Recent activity, we've had a few dividend payouts, nothing too exciting. February, August, February, so it's biannually, dividend yield is 1%. So not a great dividend yield, but nice steady growth, as you can see. Up 15%. Coinbase down 13%. this is a crypto trading platform. I was getting into crypto, but I've lost faith in that. It's a lot of hype, and I can't see, well, crypto coins haven't been used anywhere sensibly yet. There's just so much hype all around it, including Bitcoin. But Coinbase is one way of getting exposure to crypto, because it's a trading platform, I believe, but we'll get confirmation here. Coinbase, excuse me. The US-based platform allows users to buy and sell Bitcoin, Ethereum and other cryptocurrencies via exchange and brokerage system. So it's a trading platform for crypto. So that gives you exposure to the crypto market. But there's a lot of hype around crypto. Renewable infrastructure down 31%. This is my attempt to get exposure to the renewable markets, wind and solar, etc. And I've got to answer a range of financial questions for some reason if I want to buy any more of this stock. I hold 14 shares at the moment. The current value is £13. I'm down 13%. Dividend payout 25 pence in March, 25 in December, 25 in September. So we've had some dividend payouts, and dividend yield is 7%. Where are we? That is a bit about the Renewable Infrastructure Group PLC. This investment trust invests directly in renewable energy infrastructure, including solar and wind generation. So yes, this is giving us exposure to the renewables market, which is only going to go one way, and that is up. Granger. I've been aware of Granger for a long time. UK-based company that builds and rents out houses. A private landlord, also has properties in Germany. The stock hasn't done so well lately on performance. I own 4 shares, and I'm down. The recent activity: dividend payouts: February 17 pence, July 9 pence, February 15 pence. Beta, the shares are not traded that much, or that. No price to earning ratio, I don't know why. Dividend yield 2.84%. Price to book ratio 0.92. So in theory, the company is, when you buy shares in the company, you're actually buying for less than they're worth. So you're actually making money straight away. So that's where we are with Granger. I'll just see what they say they do as a company. The firm operates rental properties in UK and Germany, taking part in development projects and offering retirement housing. So they are a private landlord. So they give you exposure to the UK and German housing market. And the last one is Ceres. This is what Anne chose because it's new technology linked to the renewables. Not doing so well at the moment. Just go back. And we've got the investment is 3 shares, current price £5.32 per share, down 37%, £3. We bought these shares in January 2020. Price to book ratio is 1.9, and it says here, where are we? About Ceres Power Holdings, UK market. Ceres is a fuel cell technology firm providing energy that is environmentally friendly and cheaper through their steel cell technology. This company serves customers globally. Basically what they do, have got technology where you can pass hydrogen gas through their cell, and it's turned into electricity. So this is a way of storing hydrogen. You can store it in a car, and when you want electricity to run the car, the gas supply is turned on, passed through the cell, and electricity is produced. So technically the thinking is you have a battery car that you charge up. When the batteries are depleted, you don't need to go to a charging station. You just switch over to the hydrogen gas supply. The gas is passed through the cell and produces electricity, so you've increased your range. So you could say it's a dual fuel car, both being green. So that's the quick thinking behind Ceres, and that is the stock holding on Anne's portfolio. Overall done quite well. We are up £203 and we've had some dividend payouts. If we go to activity, we can this is the activity in date order, all activity. But if we go to filters, we can go to dividends, apply the filter, and we can see the dividend income over the months. So FTSE All World dividend £6. So in June we've had about £8 or £9. April we've had £6. March we've had what we've got here, 1, 2, 3, 4, about 4, 5, £7. February just over £1. January 2, 3, about £4. December lots of small payments, 1, 2, 3, about £3 or £4. October 55p. September lots of dividends. So you can see Anne's holding has gone up in its valuation. Where are we? Back to the portfolio. The value of the portfolio is up £203. Now we're sitting at 1,943. Plus we get some nice dividends on a monthly basis. So this is the Freetrade app. This is only one of the apps I use. She's also got Trading 212 and AJ Bell. I hope you found this interesting. Any questions or comments are more than welcome. I upload this to my YouTube channel, You Are Moving Up, and to help this channel grow, could you please subscribe and also comment if you get time. But subscriptions and watching at time all help my channel to grow, and it keeps me motivated to keep producing videos like this. So until next time, I bid you all a really good and exciting investing adventure.